We're joined by Chris Harvey, head of equity strategy for Wells Fargo Securities. Welcome to Trading Nation, Chris. Here's the question. Friday's big story was the drop in Bitcoin and other cryptocurrencies. Is there any risk, though, that a continued decline, if we get one, in cryptos will impact the equity market?
Yeah, I think there is. There's a lot of froth. So people have been asking me about speculation in the equity market, and I point to the crypto markets. There's a significant amount of froth in the crypto markets. We do think that if that froth comes out, it will start to spill over. It's not going to happen in a vacuum. And we're starting to see a very small glimpse of that today. You're seeing technology down a little bit, not a lot, but a little bit. Within technology, you're seeing semis heaviest. Semis, a lot of the semis are related to some of the cryptocurrencies. So again, this is just a very small, we'll say, blip or a bit of volatility. But if we see more of that, I would expect to see that volatility start to affect the equity market.
Is there any evidence anywhere, and Chris, you may not know, and I don't want to put you on the spot, but that the crypto buyers are the same people that would buy equities? It seems like it's a totally different group of people that people that just don't trust or whatever. They want cryptos. They're not selling stocks to buy Bitcoin, is my point. Or do you think there is a cross-pollination there at all?
Yeah, I don't get involved to that degree in that market, so I would just be speculating on speculation. I think that's a good point. I think that's a good idea, but I don't have the evidence to prove that out one way or the other.
No, the only reason I ask is I wonder if the other side of it is that cryptos, if they continue to fall, would that cash that people they're obviously selling then go back into the equity market? Kind of the flip side. Maybe it could help stocks.
It could, but again, I wish I had that information. We just don't. But I understand that line of reasoning, and I see it. At the end of the day, what we're worried about is froth coming out of that market, and that's starting to affect equities.
Fair
We're
point.
seeing it a little bit, but just not to a large degree. And it's something to watch out for in 2018.
Yeah, and we kind of threw this one on you because of what's happened while we're taping this on Friday. Let's get to what you are here for, which is what's going to happen with the equity market next year. You're reasonably optimistic. What are the biggest risks, though, to your forecasts and to the equity market? Let's start with the bad news first.
So in the bad news, what we think about with the equity market, it's a first half, second half story. We think the first half, you're going to have M&A. You'll have some positive spillover from 2017. However, in the second half of the market, what you're going to have to deal with, what the market will have to contend with, is EPS peaking, ISM potentially peaking. You're going to have the yield curve in all likelihood flattening. And in addition to that, you'll likely have multiples start to compress. And we think in the second half, you're going to have to scratch and claw to stay afloat or to break even. And so our fear is not so much the equity market, just the timing of how things occur.
Yeah, and I want to be clear. Your target is 2863 on the S&P, about 5 or 6% upside. So you're not negative. No. You just see us returning to more normalized return. I mean, that's kind of the average return for the market, right?
Yeah, I think that's right. I think what people have to do, and people ask me about, hey, Santa Claus rally and equities. And what I tell them is I think there's been a Santa Claus rally all year long. This has been an incredible market. We're up 20-odd%. And that's great and that's fantastic. But you have to lower your expectations for next year. A lot of good news is already priced in, and we just don't see that much going forward. It'll be a decent market. It just won't be a banner year.
Will the Fed be the Grinch? I mean, I would assume everyone knows there's probably 3 rate hikes next year, 2 to 4. Do you think 3 rate hikes are already priced into equities? Is the Fed, though, risking on the overshooting, or do you think no rate hikes are priced in?
No, if you look at some of the markets, it looks like about 2 rate hikes are priced in. With regard to the Fed overshooting, at this point in time, over the last few years, it has not paid to get too aggressive on the Fed. The Fed has been slow and steady, and until they change or they give you some indication they're going to do something different, I think that's the proper approach. And let's not forget, there's going to be a handoff between Yellen and Powell. Powell will have to be somewhat, we think, he'll have to be somewhat conservative coming out because he has to have the confidence in the market. He has to build confidence from the marketplace. And so you can't come out swinging in an environment like that.
Chris Harvey, head of equity strategy for Wells Fargo Securities. Chris, it was a real pleasure to have you on. Thank you.
Thank you.
Happy New Year. We'll see you in 2018.